regarding, I think, conducive environment from a policy perspective, we know that the Ethiopian government already, somehow ratified the National Financial Inclusion Policy, but this policy has to roll out, beyond as a policy. For example, I think we need to encourage to have some startup funds for the youth and women, because when you talk about financial inclusion, usually it comes to the level where the youth and women, they have a significant role in agriculture, but their role is somehow undermined when it comes to access to finance. So it's understandable when it comes to financial institutions such as commercial banks, it is difficult to provide financial assistance on a greenfield level and on the ideal level of a company. So such a national financial inclusion has to top up some startup fund for youth and women, so that once the idea is piloted, then it is easy for financial institutions to provide more hand to financial inclusion. But also I think it's important to promote blended finance. In some countries, there are philanthropists, development partners, and even a government. They provide hand to some projects, such in agriculture, to de-risk. If it is believed the impact is very much, but at earlier stage, if it has too much to lose for the business enterprise, then they provide such a financial assistance. And the other is, we need more development finance institutes. We only have one development bank, but not dedicated to agriculture. So in terms of financial inclusion, I think it is really important to have an institutions that really understand what financial inclusion is. Financial inclusion is not about number, but it's also about impact and sustainable production in agriculture. Yared's question on the land policy and how to use land for investment. There was a project called LIFT. It was a project by FSDO. It completed phase 1. Unfortunately, it didn't happen for the second phase. They produced around 14 million secondary land certificates for smallholder farmers. Because if you know how the microfinances work in rural area, it is mainly the group loan, where 5, 7, or 9 individual farmers come together and they take loan for a group collateral. After the introduction of this LIFT, now smallholder farmers without a group collateral, they can take the secondary title deed to microfinance, and they take a bigger volume of loan, like 50,000, 60,000 and beyond, to do their activity. And there was also a policy on movable collateral registry directive, and this is mainly for for agro farmers and also for pastoralists. The common mistake we make is that we always talk about these cereal crop production farmers, but not about pastoralists. But this movable collateral registry directive works for both farmers in crop and livestock, where they can bring their commodity and their cattle, or if they have a tractor or a land, so that they will be eligible for financial support. And the National Bank of Ethiopia also drafted 5% of all commercial bank loans should go to agriculture, but I don't think we have met that standard.